Hey everyone, in today's video I'm going to explain in simple and beginner-friendly terms what leverage is on a crypto exchange, how the fees for using it are calculated, and how to actually use it. I'll also break down all the risks involved with using high leverage. Before we dive in, I recommend watching my previous video where I clearly explained the difference between isolated margin and cross margin and when to use each. But just as a quick reminder, isolated margin means you are only risking the money in that specific trade, while cross margin means you are risking your entire futures balance. So what exactly is leverage? Simply put, leverage means borrowing money from the exchange to trade with a larger position than your actual balance. You can use leverage in futures trading and in margin trading. But in this video I'll focus on futures, since that's where most beginners start. The concept of leverage works similarly across most exchanges, though some small differences exist, which I'll explain later in the video. Most platforms offer leverage from 1x to 500x, depending on the exchange and trading pair. For example, on this exchange you can use up to 500x leverage for Bitcoin. On another exchange it might be limited to 100x. For some altcoins the maximum could be 50x or even 25x. It depends on two main factors: token volatility and market cap. The lower the market cap and the higher the volatility, the lower the leverage allowed by the exchange. Remember, using high leverage comes with huge risk. Many traders who use it end up getting liquidated. I will also explain how liquidation works in this video. Let's break it down with some numbers. Let's say you have $100 in your futures wallet. If you trade without leverage, you simply open a position with your $100 and your profit or loss is based directly on that amount. For example, you open a long position on Bitcoin with no leverage. If the price goes up by 10%, you earn $10. If it drops by 10%, you lose $10. Simple and straightforward. But now let's say you use 10x leverage. That means your position is now $1,000. Your $100 plus $900 borrowed from the exchange. Your profit is now calculated based on the full $1,000, not just your own funds. So, if the price moves up by 10%, your profit isn't $10 anymore, it's $100. And that's the power of leverage. With just $100 and 100x leverage, you can open a position worth $10,000, and your gains are calculated as if you actually had $10,000. But of course it's not all sunshine and profits, cause losses work the same way. Let's go back to our earlier example. You have $100 in your account. If you open a long position using isolated margin with 10x leverage, that means your position size is $1,000. Your $100 plus $900 borrowed from the exchange. Now, if the price goes against you, meaning the price moves in the opposite direction of your prediction and drops just 10%, your position will be liquidated and you will lose your entire $100, cause 10% of $1,000 is $100. Now imagine you are using 100x leverage instead of 10x. With the same $100, your total position would be $10,000, and this time just 1% move in the wrong direction is enough to liquidate your position, because 1% of $10,000 is also $100. So the higher the leverage, the smaller the price movement needed to wipe out your funds. Now let's see how this works in practice. Let's open a long position on Bitcoin using 100x leverage and isolated margin. I'm entering with just $10 of my own money. That gives me a $1,000 position, with $990 borrowed from the exchange. Since the market is volatile and I'm using a market order, the exchange might slightly adjust the margin and borrowed amount, but these changes are minimal. Let's double check. Isolated 100x leverage. Order value $994. Order cost $11. Liquidation price $98,931. Opening the trade. So what do we see? I used just $10 to open $994 position. Nearly 100x leverage in action. Now take a look at my P&L, which stands for profit and loss. Right now it's showing a loss cause I expected the price to go up, but instead it went down. If this P&L hits minus 100%, my position will be liquidated and I will lose the full $10 I used to open the trade. This is how isolated margin works. You can only lose what you put into the specific position. But if I had used cross margin, I wouldn't be liquidated just yet, but instead my entire futures balance would be at risk. That's why I don't recommend using cross margin if you're a beginner. Experienced traders do use cross margin as a tool, and it can be powerful, but it's risky if you don't know what you are doing. Right now my trade is showing a small loss. As you see, that P&L is calculated based on my $10 position, not the full $1000. I hope this explanation made things clear. I'll go ahead and close the trade now. Small loss, no big deal. Now let's talk about how trading fees are calculated when using leverage. In our example, I used $10 of my own funds and opened a position worth $1000 using 100x leverage. 10 mine, 990 borrowed from the exchange. The trading fee is charged based on the full $1000, not just my $10. So even though you are only risking a small amount of your own money, the fee is calculated on the total size of the position. This means the higher the leverage, the higher the fee you will pay in dollar terms. Remember, leverage is just a tool, not a magic wand. It can multiply your gains, but it can also wipe out your funds just as fast. Always use it wisely. And finally, if you are watching this video, it probably means you are curious about trading. Does it really make money? If yes, then how much? And who are the people actually making money from it? Is it even worth your time? Well, you probably won't find a better video that answers these questions and more in just 11 minutes. After watching it, you'll have a clear idea. Is trading the right kind of income stream for you? How much time does it actually take? Where should you start? What trading strategies work best? Where can you find a community of beginner traders like yourself? Can this replace a regular job or not? All of that and more covered in one short video. The link is in the description, make sure to check it out. I hope this video gave you a clear understanding of how leverage works in crypto trading. But if you still have any questions, ask them in the comments below. I will reply. Also follow me on Telegram and Twitter X. I often share trades I personally enter and post my P&L results after closing them. This is Crypto Moves. Master the move, master the market. Thanks for watching, and I wish you successful trades.